Hi, I'm Eduardo Bogosian. I'm the founder and CEO of Maestri Investment Group. Today is January 15th, 2021, and this is our annual meeting. I would like to start out by saying that 2020 was an eventful year, let's put it that way, and we were able to achieve significant results that were quite higher than our goals. We had a return of about 40% for the IPF and 85% for the IPF X2. Those far surpass our goals for 10 and 20% respectively for those accounts. I would also like to point out that the current market highs are not necessarily an indicator of a recession or a pullback. Many people believe that if something goes up, it must go down. Well, that's what people were saying about Tesla when it was up to $70, and now it's over that significantly. I think the last quote was $700, if I'm not mistaken. Let's take a look. Tesla quote. Yeah, it's at $837. If we look at a 5-year graph, it was at $40, then it went up to $80, $180. It went down a little bit, back to $85, and then now it's 10 times that at $830 at the time of this recording. So I would like to make it clear that just because the prices are high does not mean that we're going to have a recession or a pullback. I do, however, believe that we will have a pullback, but not because of the numbers, but rather because of economic activity and how it's been influenced due to the coronavirus. Now, despite being a technology-heavy index, the NASDAQ has seen these great returns because of everything that's been going on with stay-at-home and home office all across the world. People using Google, people using Facebook, Zoom. We see also an increase in sales, such as Logitech and other consumer products of that area. So a lot of it was pushed up due to this increase in demand. We also seen that they were valued much higher than what you would normally expect, because what many speculate to be retail investors investing in the stock market, since they would have more time on their hands and money, especially in the U.S. because of stimulus checks. That is certainly a factor that played into this, but we do not see that as being the major driver of this run, this bull run that we've seen. We see an increase in sales, and so far the market seems to be pricing in already the changes due to the vaccines being rolled out now in 2021. Our current expectation is that for 2021 for it to be a positive year overall. However, we expect that the first 2 quarters, the first half of the year, might be underperforming as people pick up economic activity, jobs start getting back to normal, and then in the second half to really see a return back to what would be normal for the markets. So we will continue with our investment plan, which is and always has been for dollar cost averaging. That means we put in a certain amount every month regardless of the performance of the previous month or what we expect the current or even the subsequent month will be. We do not try to time the market in that way. It has been shown to be overall a losing trade, at least in the long run. So dollar cost averaging is still the way to go in our opinion. This is not in any way financial advice. This is merely our opinion and how we as a company will be acting the year to come. If you have any questions, you can access our forums, contact us through Facebook, Twitter, or any other of the social media platforms that we use. Beware of any possible scams. We will never ask for any passwords, and the only real accounts that are in our name are shown on the website. If you go to our website, I'll put the link in the description, investmaestri.com. They will have direct links to our real official accounts. That's the only place you should be talking to us and looking at it. We recommend the forums, as they are a pretty hard to fake website, and to only follow legitimate links. Beware of any possible scams. We don't ask for any personal information, and with the increase in the number of people using technology at home, we've seen an increase in attacks in personal networks, especially those related to businesses when they are attached to home offices. Looking at the International Power Fund, the IPF account, through MyFxBook, they are a third-party provider of financial analysis. Using a time-weighted return, we have a 38.48% gain for 2020 in the IPF, and an 84.59 time-weighted return for the IPF X2. Both of which, as I said, clearly surpass our goals, but that does not necessarily mean we're headed to a downturn. We expect there to be an underperformance in the first half of 2021 and picking up the slack in the second half of 2021, and still dollar cost averaging. As always, do not invest more than you can afford to lose. Follow, best investing practices, and with everything that's been going on in the world right now, we wish you all safe travels in a way, and we hope to get through this all together, and I hope to see all of you next year at our next meeting. Thank you so much.